What's going on, everybody? You got Evan Knowles and Logan Jones here with the Middle Tech Podcast. This is the last episode of our three-part series with Poplar Ventures. We had a lot of fun, but there's one more episode here that you get to listen to. So this episode is all about how a venture capital firm, quote, digs in after the investment has been made. So John likes to say that once he invests in a company, his favorite part of the process, and many other venture capitalists like to say this as well, is when they get to dig in and help the company scale and grow using their capital. And so the big part of this episode is talking about once that transaction is over, the stress of the investment's done, but you have a new challenge, which is to scale your business. And luckily now you have, like I said, that venture capitalist to help you along the way. So this episode's all about that part of the process, which is basically the end of the fundraising process and you building your company, and now you've got your venture capital firm in your ring.
Yeah, now you can kind of consider this venture capital firm and the people associated with that firm as kind of part of your team. A lot of times we'll take board seats on your board and help give you advice. They'll help with emotional support. They'll help give you intros. If you have additional capital needs, they'll help you out with that as well. So John kind of outlines all of these different things that a VC can do to ensure the companies in the portfolio are going to be successful. So we'll cover exactly how they assist in these ways to make sure that their investments are well looked after. And we'll go over kind of the nitty gritty of what it looks like once this investment has been made, once everything's been approved, and once you are out building your company using these funds to make something great. So we're going to go ahead and dive on in. We hope you guys have enjoyed this series, and we're looking forward to hearing what you guys think.
All right, so on this episode, like John mentioned on episode 2, he likes to dig in. As any venture capital firm should, after the investment, they should be supporting the entrepreneur, doing everything they can to make sure it remains a successful business and grows into a successful business. So we're going to dive into what that looks like. So briefly touch on, as a venture capital firm, and specifically Poplar Ventures here in Middle America, what do you guys bring to the table after the investment? How do you guys continue to provide value throughout the life cycle of the company?
Yeah. So, so one is we've talked about in the prior episodes, but one of the pieces is bringing our own experience, obviously, in terms of operating background and or financial background to the table. Second, I would say would be Poplar has a little bit of a different structure with our investment advisory partners, where we have 7 individuals that are also limited partners that act that are available to the portfolio companies to assist them. And these are folks that have deep software technology experience, CTOs, CFOs, CEOs. And when I say CEOs that have actually gone from very early to 200 million plus revenue. So these are folks that have got real experience and they've been there before. And again, being able to make those folks available to the portfolio companies to help them through whatever issue that they might be dealing with at that particular time. Every investment is different. Every entrepreneur is different. So part of what we try to do is to try to identify what their strengths are, what their weaknesses might be, and try to think about how we can complement what they are doing. So, and that's, it is true. Every single entrepreneur is very different. And that is half the battle, I think, really trying to figure out how do they build out their team. We spend a lot of time thinking about team. And even though when an investor first makes that investment in a team, I've never seen a business that did not evolve their team, right? So in Nextel, when I started, we had a certain management team. Within 3 or 4 or 5 years, there was a new management team. Within
they kept you.
Hopefully I was doing a good job. But with another 4 or 5 years, there's another management team. So, and so it's natural that occurs as you grow your business. You're going to constantly be bringing in individuals that have been at that level of the company and can take it to the next level. So those are really important things to think about. And so I try to spend a lot of time on team and recognize that, again, it's never perfect. It's never going to stop changing, but constantly be looking for ways to upgrade the team so that you can go build that business. Because ultimately the business doesn't build itself, right? It is about the people that are leading the company. They're the ones that are going to make it go. So a lot of focus on that. And again, the investment advisory partners really, from our perspective, can bring a lot to the table there, given the deep experience that they have. What else would you say in terms of value add?
Yeah. Well, one note I will say, given the fact that I've only been here a little less than 3 months, so almost an outsider looking in on the advisory partners, is it is very unique in the sense that they really want to be involved. Like John said, they're investors in the fund, so they kind of see the benefit here. And I know a lot of funds out there. I've spoken with a lot of funds. I have operating partners, advisors, LPs that are strategic in nature that, may take a phone call here and there and maybe have a conversation. But, one thing I have been impressed with from Poplar's standpoint and the advisory partners is they are asking us or asking John, how can they get involved? How can they reach out to the founders and be a value add person to, not only a portfolio company, but diligence as well. So I will note that I do view that as a key differentiator there. Financial reporting is one that we usually help. So at the stage we're investing, I would say most times than not, there's likely not a sophisticated financial reporting function involved in the company. So putting together financial reporting packages on a monthly basis to help the company think through, strategically, how do you use KPIs to drive the strategies you're trying to make decisions around, your go-to-market strategy, for example. And then probably part of the advisory panel, but also just network in general, is customer and supplier or vendor support. So, really talking about from a technology standpoint, given we only invest in software, what is your technology stack, from a vendor and cloud hosting network, who are you using? Can you scale with that? So different strategic elements around there, and then customers making introductions to help drive value from that perspective.
John, when you're forming your fund and having people invest in it, do you strategically try to pick people that have some sort of expertise that could benefit the companies you invest in? That seems like it'd be a perfect crossroads to have that. Is that something you're intentionally doing when selling that fund?
Well, in this particular case, because it was a relatively small fund, 22 million, and I focused entirely on high net worth individuals, so I didn't go to any institutional money. By its nature, I was going to individuals that have business success in some sort, right? And they all, some are within the software technology world, some of them aren't. But the ones that were in the software technology world, I was very consciously recruiting to get them to invest. And I actually had a couple that I really wanted to be on the investment advisory, group. That ultimately decided not to invest in the fund. And I said, well, I'm not going to put you on the group if you're not going to invest. So that was kind of a, from my standpoint, a kind of a, a little bit of a check to say, are you willing to, put your money in and support what we're doing? But so there were a few that I actually was really trying to get on that group, but they ultimately decided not to invest, which is fine. But I'm very happy with the group that I've got. So, and again, you can't, I wasn't trying to get every investor involved because it's unwieldy, right? So part of what I'm trying to do with this group is I feel a little bit like a matchmaker. Again, I'm very conscious of trying to understand how can this particular investment advisory partner help that particular entrepreneur, or can they? Maybe they can't. Maybe they're not the one that I should that should be involved with that particular company. So I'm constantly thinking about that, trying to figure that out. I'm trying to let that occur naturally. So, for example, create opportunities for those folks, the partners, to have dialogue with the entrepreneurs, make sure that they're well informed about what's going on with the company, and allow that natural, relationship to develop over time. And I think that's ultimately the best. But I do feel like at the earliest stage, I am trying to do a little bit of a matchmaker to make sure that I'm getting the right people involved in each company.
And to give the entrepreneurs listening, a more general perspective, do most venture capital firms in this area have an advisory board like you guys, or does that make you unique? Talk about what that looks like in a general sense, in this part of the United States.
I think it's our funds. Of course, it's unique, right? No, I do think it's a little bit unique. I mean, definitely there are definitely firms that have advisory boards, and there are firms that have their own network in different ways, right? So a lot of the very successful VC firms have networks of executives that they've either invested in previously or that they built up their network. That may be more valuable than our group, honestly. But I do think it is a value add. Again, I'm not going to get into a game of trying to compare, this one's better than the other one, but I definitely think it's a value add, and it is something that we consciously try to bring to the table.
Yeah, and we're going to dive into these points you mentioned here. The customer and supplier support, the go-to-market, the talent. We'll dive even deeper into the advisory partners you have. But do you guys get a board seat typically when you guys make these investments? Talk about that briefly, because an entrepreneur should expect some kind of board change when they're getting an investment. Dive into that a bit, and what does the representation look like for you guys? And at this point, what does a typical board even look like for this stage of a company?
Well, so when we were talking about term sheet, the governance piece is a big part of that term sheet, right? Other than economics, I would say typically if whoever the lead investor is typically going to ask for a board seat, and you should expect that they will have a board seat. There may be other investors in a particular round that would become board observers. They may not. So in other words, a board observer, I think most people understand what that is, but basically what that means is they're not technically a board member. Therefore, they don't have voting board rights, but they are allowed to come to the meetings, and they're allowed to get all of the information that is shared with the board so that they can basically be up to speed. So I would say our philosophy, I never want to kind of say there's only one way to do this. I have a bias toward being on the board, and that's primarily so that I can add value, right? If I don't know what's going on with the company, it's a little hard for me to really kind of dig in and help. So it's partially I want to be there from a fiduciary. I have investors, so therefore I want to basically look out for that investment. So I want to be on the board. But I'm fine in certain situations, if we take a board observer seat instead of an actual board seat. And again, the important point is that we actually are aware of what's going on with the company. We have the dialogue with other board members. We have the ability to communicate with the CEO and the management team, so that we're getting a feel for what are the issues with that particular company. What are the ways that we can assist? That's the important part. And so I also view it very strongly that if somebody doesn't want me on the board, then I probably shouldn't be investing. I truly believe that. So part of the fit process is, if you come to me and say, well, I'll be happy to take your money, but I'm not going to give you a board seat or a board observer, then I'm not in. Sorry. Because I just don't, you signal to me right there that you don't think I'm adding any value. And again, you don't want your board, the actual board, to get too big, right? So I generally try to keep it at no more than 5 would be the goal. As you raise more rounds, the board can get bigger because you got more investors, and therefore the investors want to have a seat at the board. My philosophy is board observers, again, don't want to get too many, but if the investor is value add, then that's a good thing, right? You should want them to be involved and be available.
Yep. One of the things that you had mentioned you bring support for is customer supplier support. What does that mean? Because I haven't heard that.
Yeah, so I think it's usually capitalizing on the network of the VC, right? And so we have advisors, and those advisors could be potential customers, they could be potential vendor suppliers. But in general, the network of your relationships and using those to think strategically about who a potential customer could be. I think I'll focus on the customer side because I think that's really where the true value in it lies. And so not only talking about, hey, working to become a near-term actual customer, but also could be talking with an executive at a larger corporation and thinking through go-to-market strategy and potential pricing and customers like that, because they are a relationship of yours and not everybody has that type of relationship, but utilizing those ones to where you could say, have a conversation with this executive or this founder to talk about, hey, what would they need to do to maybe become, selling into the enterprise level versus the SMB market, if that is a strategy that they have on their roadmap, and what would it take to be able to sell into your company XYZ, whatever it is. So I think really there is kind of where you're just leveraging your network to drive value from a customer perspective and vendor perspective.
Yeah. What about helping companies go to market? So I know that you guys pretty much only invest after a company has got revenue and all that. So does that necessarily mean, expanding their market? What does that look like?
I would say that, it's going to be around, again, working within the network of your contacts, and in terms of, do you have sales and marketing executives in your network that have the experience that might be a value to this particular company. It is around being thinking through strategically, what is the go-to-market and how are you trying to build? Are you trying to build direct sales? Are you trying to build partnerships? Are you trying to just basically be a kind of a product-led, marketing-driven company? There's a lot of different ways that you can go about it, and you have to kind of sort through those. So I'd say more from our perspective, probably more strategic input in terms of how you're doing that, and then trying to bring, again, the right people to the table that have got the ability to help you think that through.
Okay, so let's talk about bringing those right people to the table, because I know a big part of it is helping those companies acquire that talent. So what does that side of the business or that side of the advising look like?
Well, again, it's the network, right? So it's being willing to open up the Rolodex and say, you need to be talking to this particular person. They've gone through this already. That's really what you're trying to do. I mean, I don't think it's much more complicated than that. Again, back to the investment advisory partners, one of the things we try to do, they have networks too, right? So these are all successful software executives. So we may not know them. It's kind of like LinkedIn, right? It's like I'm only one or two removed from the right executive that this particular entrepreneur needs to be talking to in order to help them think through that go-to-market strategy. So let's find those right people to help them.
Mm-hmm. And at the stage you guys are investing in these companies, what kind of hires are you typically helping them make at this point? Are they hiring VP of sales? At Series A, what are some of those more common roles you guys are trying to help fill that you guys see?
I would say it's the layer that reports to the CEO across the board. And again, every company comes at you with actually most companies don't have a complete team, right? If you're at this stage, either by design or they haven't had the capital yet to be able to hire those folks, that's not a knock on those companies. It's just, it is what it is. But most companies that we're looking at don't have a complete team. There is a gap somewhere. So it's about, okay, within that senior team that reports to the CEO, what are the gaps, and let's make sure we fill those gaps.
Yeah. And one thing too, and I wanted to touch on earlier when we were talking about team and adding value, and from that perspective, John was hitting on it. It does change, and I don't think that's a bad thing from the founder's perspective. Sometimes they get very emotionally tied to the team, but every strategy changes for your different milestones that you're trying to hit. So in our business, it's usually centralized around ARR. So, what got you from $1 million to 10 million of ARR is likely going to be much different than what gets you from 10 million to 25 million, then 25 million to 100 million. And likely is centralized around the team that you're putting around likely the founders or CEO to go accomplish those milestones. And so sometimes founders, that can be a sticking point between investors and founders of who is that right team to go accomplish those milestones. And so having an open mind on both sides of the table about who that right person is, and that's, I think, where we come into play, and not maybe having it in our network, but also asking the right questions of the CEO and probing them from a talent perspective, but also from a customer and go-to-market strategy, like you were just asking about, asking the right questions to make them think about, are you working towards a milestone, or are you just working to be happy in the environment that you're in today? And I think those are kind of the key elements of which we try and add value along the way of hitting those milestones.
Yeah, John, from your experience of the many years you've been doing this and been in the industry, what's typically the hardest position people are hiring for? What are some positions that people hire for and they might fail several times? Have you seen a particular
the one they're not good at?
Makes sense,
right? I mean,
they wouldn't know what to look for if they're not good at it.
Yeah, I mean, if you're, I would say in an early stage business that what I've seen the most difficult to hire is typically around the go-to-market side. You can, you think about it, especially because we're focused on software technology, the product side and the technology side, getting a product to market, that's well known at this point for the most part, right? You got plenty of technology people that can go develop the product and think about how they would go get it to market. You got a lot of people that know how to do digital marketing, to kind of get a little bit of awareness about what your product is and so forth. The sales side's hard, right? I mean, sales is, it's the oldest, it's like the oldest profession in the world, but it's hard.
Yeah.
And if you're in an early stage business, it's even harder because if you're not really crystal clear about what your value proposition is to the customer, and you don't have a good methodology for how you go communicate to that customer and the process and follow up and all of those things, then you're not going to be very good at it. So again, I think it is dependent on, again, that's part of the value of one of the things I was going to say earlier is that the value of building the relationship with the CEO. So one of the things I really try to do is to have enough dialogue with them, even outside board meetings, where you're be able to have more informal conversations about what's going on with the business. And when things heat up in whatever way that might be, whether it's competition or you've got team issues or whatever it happens to be, you've got the ability to have a trusted person there that can help you think it through, right? And is not going to judge it. And I don't. It goes back to something I said at one point around no surprises. Just talk. Tell us what you're doing. What problems do you have? If you got concerns, let me know what those are. I can't help you if you don't tell me. And then the worst is I get surprised, right? You hide it because you're either, you don't want to disclose it, but then I get surprised, and now I'm like, come on, you gotta tell me what's going on, good and bad.
Yeah.
I'm not going away. Give me the good and the bad. I'm going to help you.
Yeah. I mean, do you intentionally try to foster that kind of environment for founders to be vulnerable with you in those kind of ways? Because I'm sure there's times when there's probably an issue that arises and it's like, I don't know if this is worthy of telling my lead investor about, but I feel like if you can intentionally foster a type of relationship with that founder where they're willing to be vulnerable, are you constantly taking steps to try and know more about the life outside of the business? Or I feel like there's a lot of things you could do to try and have that open line of communication.
I'm not sure that I'm smart enough to actually do what you just said, but I would say that yes, the answer is yes. I do try to build a relationship where I feel like that we've got a very open dialogue, mm-hmm. right? And I want the entrepreneur and the CEO to feel like they can come to me with anything, mm-hmm. and be able to talk about that.
Yeah.
And I try to be very open, and I try to be objective. And sometimes I say, look, I've got my investor hat on now. Recognize I've got my investor hat on. Now I've got my board hat on. Now I've got my just friend hat on. So recognize that I'm here to help, and let's work through it.
Yeah, and Christian, when we were talking about this and preparing, you want to be there. You'd said this, that one of your all's goals is to be there through the good and bad times, right? Throughout it all. Talk about how you guys, do that. Like, just talk about how often you're talking to them. Are you meeting with them in person in their offices? Are you going out to dinner? Talk more about what it actually looks like to do what you just
can't do
about.
Dinner. It's COVID, man. Come on.
Whenever let's just imagine this is evergreen content. This is gonna last a while. It's gonna end someday. So when it's all over, what does it look like?
Yeah. So I think the biggest. We definitely talk the specifics on the how, but the biggest message there is consistency, and I think that's the core message of what John's talking about is. Even in the positives and the negatives, that you're the same partner to the founder group and executive team in that entire process. And so when things are going super well, you're not just, high-fiving them, patting on the back, saying you're doing a good job, but you're just asking the same types of questions you would, normally. And then in the bad times, same thing. You're involved, to John's point, they're having an open dialogue with you and you're getting engaged to try and help in any way you can, because it's also important to us as the investors. So many complaints that I'll hear from entrepreneurs who have, brought on institutional capital and been successful or not successful. They've talked about, when it got really bad, that's the first time I got the call from the lead investor. And I think that's not the type of investor Poplar wants to be. We want to be there, again, throughout the good, thinking how you could get even better in that good time, right? You're probably in an inflection point, so how can you continue to capitalize on all the success you're having today, but also thinking about, this inflection is probably going to flatten out at some point, but then how do you create the next inflection, and are you setting yourself up for that? And then on the bad, if things are going bad, you lose a key customer, well, how do you continue to go out and execute on your go-to-market and sales strategy to get the next big customer? And just continue to probe and ask those questions, have an open dialogue, and just be consistent in that partnership is probably the critical message.
And at what point do you guys see a red flag in the relationship and try to triage? Like, what are some ways that you see? Is it because they haven't talked to you for a while? What are some things that you see and you say, we should probably hone in on this business a little bit more because we're not getting engagement or we're not getting the right kind of communications? What are some things you've seen related to that relationship that is a red flag?
Oh, it's a tough one. Right now, fortunately, I got 4 pretty good CEOs in the portfolio that are all pretty good about communicating. So I don't have any issues with the ones that are there right now. In the past, sometimes it can be about disclosure, but it also can be about, I'll give and you won't know who this is, but I've got involved in a business in the past where the CEO was just very too optimistic, consistently optimistic, and what is it? Overpromise, underdeliver. It's just really bad. And so you lose credibility. So that's one I really don't like. Again, I want you to achieve high goals because we're trying to grow businesses here, but I also want you to hit your targets.
Be realistic.
Yeah, be realistic. Exactly. Tell me what exactly is going on in the business. Don't give me the Pollyanna stuff. So that's one that I don't know that I'm looking for it, but it definitely is one that I don't like.
Yeah, and I'd echo that. That was actually going to be one of the points I made was one of my past experiences, when companies are in the bad times, when you see an executive continue to preach that the strategy that they're working on is working, but then the results are speaking opposite of that on a consistent basis, month over month, quarter over quarter, and they're very set in their ways and not open to different approaches or the opinion of the board or the other management members. You talk about a red flag. To me, that's when the red flag is when you start seeing results that are not correlating to the message that executive is telling you. I think that's a big red flag. And then when they start telling you not adapting to different ideas, or at least being open to different ideas that are coming, whether it's from their co-management team or the board or whoever it may be, their own advisors, that's, where the red flag really gets raised.
Yeah. We have, I think Poplar's got a little bit of advantage because we're small. We're kind of more of a boutique firm, if you will. So we can be a little bit more hands-on and a little bit more available. But it's, you guys are young guys, but it's this stage of my career, it feels good to be able to give back and to be able to help. And, one of the things that Christian and I have been talking about, we're going to launch what we call Poplar Open Forum, which is an opportunity to basically one day a month, half a day a month, basically open our calendar to anybody in the startup, emerging growth stage, type of company, to jump on a Zoom call, hopefully at some point in person, but jump on a Zoom call and have a conversation about whatever you want to have a conversation about, to be available to give them feedback and help. And even if it's not a technology company, I'll be the first to say, if you come to me with something that I don't know about, then I'm going to tell you I don't know. But I do know a lot about the business side, and there's plenty of pattern recognition within the business side that I can help with a lot of times. And so I just think, again, it's a way to give back. It's a way to try to help entrepreneurs that are at earlier stages. And when I'm looking at companies at that stage, it's more about honestly trying to keep them from making stupid mistakes. Try to help them think through things. And, I see there's no question. There's sometimes when I listen to something somebody says and I'm going, in my head, I'm going, did they really just say that? Are they really don't understand what's going on there? I don't say that because I'm trying to be respectful that everybody has to learn for the first time at some point. And I don't know where everybody is in their journey in terms of doing that. So they may be confronting something for the first time. And so I need to be respectful of that and be able to give them a valid answer. If you ask me that twice, then I'm going to start, saying something's wrong with you. But I do try. I want to help, and I think that we've talked about this, so we'll start doing that in the next sometime in the next month.
Yeah, and anybody, like John said, it's open to anybody, and they can go visit the website to kind of log on and see the calendar, schedule time with John and I, and we're going to be rotating out and open to anybody, and we'll discuss any topic available at that time.
Yeah, well, we appreciate you walking us through the topics of, the hunt, the investment, and what it looks like after the investment. I think this is going to be super helpful for the community here in Kentucky and in Middle America in general. I think this is something that has been missing a lot of times when you look up venture capital or you look up what does it mean to raise money as a startup. You get the West Coast and you get the East Coast perspectives, but I think it's important to also get the Middle America perspective and also the perspective of somebody, right here in our backyard. So we really appreciate you guys coming and sharing this information. Hopefully you listeners and viewers, hopefully this is very valuable. We'll be releasing these each week. So over the next, we've released 2 already, and so this is the last one, but we're also going to be releasing blogs and videos, and so go check those out. But hopefully this is helpful, and we definitely appreciate John and Christian, you guys coming and doing this. Thank you very much.
Thank you, guys.
Yeah, thank you. Appreciate what you guys are doing.
All right, Logan, we had a ton of fun doing that, didn't we?
We sure did.
We plan to do a lot more series like that. John and Christian were great to work with. They are a very approachable venture capital firm, so if you guys want to reach out to them, please do. John and Christian would love to hear from you. You can find them on their website. You can reach out to them on their emails that we'll put in this series notes and on the blogs, so please reach out to them. But if you're a venture capitalist, you're a founder, you're an ecosystem supporter, and you want to learn more about what we're doing, or you just want to learn more about the startup process in general, if you're just a listener, please reach out. We're always available, willing to speak, and we're trying to create more content like this all the time. So if there's, again, any part of the process that you want to learn more about, we'll be happy to help.
Yeah, and we're big on making sure this content gets out to the people it's supposed to get out to, and the way to do that is by making sure that you're following us on social media, sharing us when something resonates with you, rating us and subscribing to us on your favorite podcast platforms. So if you just search Middle Tech Podcast on any of your favorite platforms, you're likely going to find us. And it would mean the world to us if you went and rated us on one of our favorite podcast platforms, which is Podchaser. We think it would be your favorite platform too if you went and checked it out. So if you go in and give us a rate, that would be huge for us. That helps us get discovered. That helps us put this content far and wide, which is the overall mission here. We're wanting to spread the gospel of this region and what's going on here in the startup ecosystem as far as we possibly can. So thank you guys for following along in this series. We're looking forward to doing more like this, like Evan said. And if you ever have any feedback for us or things that you would like to see us doing more of, or maybe less of if we're not doing something well, please don't hesitate to reach out. So thank you guys for tuning in, and we'll see you guys for the next episode.